The abrdn New India Trust remains largely the same. Our philosophy remains one of long-term quality, and we're generally happy with the holdings that we have in the portfolio. The trust still comprises, or half the trust still comprises, sectors including financials, consumer, as well as IT services. Compared to the benchmark, we are more heavily exposed to financials, which includes banks and insurance, communication services, which includes telecommunications, as well as real estate. The recent performance of the trust has started to look better year to date in a more challenging market backdrop for India that had seen an almost 7% decline. Really happy to report that the trust has been more resilient, and we had outperformed by almost 4% for the year-to-date period end March, which is a nice turnaround from last year's more challenging relative performance, back in 2022. And there are a few factors for this. First, we have seen our quality holdings show the resilience that we expect of them. That includes holdings that such as UltraTech Cement, our private sector financials, as well as some of our consumer staples like Hindustan Unilever. So that's one. The second is that we have started to see a catch-up in performance from some of our growth names with the change in rate expectations. PolicyBazaar is one good example of that. They have started to re-rate quite significantly this year because they have been executing. And I think, again, because of how rate expectations have changed, and that supported some of these growth names. Lastly, we have started to see some of the big groups, starting to underperform, and that has been beneficial for the trust. And that includes conglomerates like Reliance Industries, as well as the Adani group of companies that we don't hold for corporate governance reasons. But during the period, we have found two new names that we were very happy to add to the trust. They are in the area of consumption. The first one is called Titan, which is a premium jewelry business, and it plays very much to the aspirational theme in India, and it is the most dominant branded jewelry company in India that still continues to grow nicely as penetration levels are still very low. The second would be Tata Consumer, which is a consumer staple company, and as the name speaks for itself, it's part of the Tata Group, which is very highly reputed. It is a simple consumer staples business, good brands, and has potential to show better margins going forward, and very attractively valued as well. Against that, we have exited Nykaa, which is our online consumer discretionary company, or rather online Sephora. And we've done that really because we have concerns about some of the management changes that we've seen. So these would be the three key changes that we've done in the last quarter. But the two holdings I'd like to talk about today are actually have been in the portfolio for a long time, and yet we are still excited about the potential it has to offer to the trust long-term performance. The first would be UltraTech Cement, which is a cement company, and it is one that's benefiting from the ongoing capex and infrastructure investments that's happening in the country. So as we speak to many companies in India, there has been one consistent theme, which is that infrastructure spending continues to grow and should play well into the capital expenditure story in India. And cement, being quite a key buildings material, has been a beneficiary of that. So demand remains very strong, pricing stable at least. And what's quite good to see is that, as inflation expectations are falling across the region, it is certainly happening, for cement, and should benefit margins. And the other change that has been a positive one for UltraTech Cement, which is the leading cement player, is that with the pullback of the Adani Group, we expect competition to be more rational going forward. The other is PolicyBazaar, It actually has been in the portfolio for almost a year or slightly more now since it got listed. And very happy to report that since listing, the company has been executing to our expectations. In fact, it is doing well to the extent that the company has brought forward their break-even time frame, at least at the EBITDA level. So it's good to see that happening, and it shouldn't surprise us as well, given how the insurance industry is, an industry that still has a long way to go in terms of rising penetration. And PolicyBazaar, as an online insurance aggregator and a dominant one, continues to do well on the back of ongoing purchases that's happening in insurance. They do that for less commoditized products like health, like life insurance. And also, it's been a good platform for agents to connect with consumers, and consumers largely go to the platform to research and transact on insurance policies. So again, business fundamentals are still looking good. And, with the, rates expected to peak, that's also been a relief for the way investors look at valuations. Okay, so we expect the outlook for equities in general, and that includes India, being more uncertain, really because of rising recession concerns, and that question mark over, whether rates are really peaking or whether, we will start seeing that pivot. And that's not something that we profess to have specific insights on. What we do focus on is how our holdings perform in such an uncertain environment, and this is where we believe quality will really show its resilience. And by quality, we mean companies that have strong balance sheets, strong market positions, strong brand equity, that will do much better than the competitors that may have had an easier time when the operating environment was easier. So in a market like India, that still offers very attractive long-term growth potentials on the back of, attractive demographics, the stage of development, and some of the outcomes of past reform efforts that we're now seeing, such as driving the infrastructure investments, that will be quite good for the country. So overall, we are still optimistic about India's long-term potential. India as a market has its rich pickings of high-quality companies, and we believe that our holdings are the ones that can stand, that can be tested through the current uncertain times.